Hey, what's up, everybody? I hope everybody's doing well. Today, I'm going to be talking about a topic that's been coming up in the real estate industry for a bit, and as well as answering a question or concern that a lot of consumers may be having in this market as well. So, the big question or concern is, are we in a real estate housing bubble? Are we going to see a real estate housing crash like we did see back in '08? Now, I have this chart pulled up. It's practically single family housing units completed over the course of 50 years. I have this pulled up because we want to look at data and statistics to try to make a prediction and support an argument of will we see a market crash or will we not? And to get right into it, you can see that from 1970 to about 2002, 2003, we have had an average annual units completed at a healthy rate. So we weren't too high, weren't too low. But the interesting part was back in '08, right before it happened, we saw new construction and development skyrocket right before the big crash of 2008. And the reason why is because mortgage companies primarily lended to construction companies and developers. That way they can keep up with the number of units that they need to complete per year. Now, the problem was this with this is that they ended up having too much supply. They ended up having too many houses on the market, and what led to the big crash is that there wasn't enough demand. And because there wasn't enough demand, the mortgage companies started focusing more on the consumer and handing out loans to the consumer. That way, they can afford the properties, and the mortgage companies wouldn't, lose any money because at that point, you loan money and you're not getting paid back on it. It's a liability, not an asset. And so they ended up loaning money to people, and they didn't really do a bunch of background checks. Pretty much, they didn't check credit worthiness, they didn't check employment history, they didn't check how much income you made, and anybody was able to get a property loan at that time. They were able to get a mortgage, and some people were able to get multiple mortgages, even without having an income. And there's a really good movie explaining what happened in 2008. It's called The Big Short. Christian Bale is one of the main characters on it, but he just practically played a guy that betted against the mortgage industry at that time when everybody thought it was booming, and pretty much made his money off the pretty much the crash of the housing market. But with that being said, what really happened was that we had a lot of supply, very little demand, and then when we ended up trying to get, when the mortgage companies ended up trying to get more people to buy, they couldn't afford the loans, and that's when we started seeing a lot of foreclosures because they couldn't make the payments for the mortgage. Now, the difference now between 2008 and obviously now where we are is, as you can see here on the right in the green, for 14 straight years, coming about 15, 16 now, we have been below the average when it comes to new construction and development. And this is part of the reason why we have a low inventory problem. And when it comes to the housing market today, as well as the pandemic kind of, scared off sellers from actually selling their home because the truth is nobody knows what's going to happen next. Now, the interesting part is today we're at the opposite end of the spectrum of where we were back in 2008. Instead of having high supply and low demand, we have high demand and low supply. And the interesting part is you can't be in a bubble unless you have too much supply and very little demand. So to answer the question about the bubble, I don't think we're in a bubble right now. Are we going to see a crash coming very soon? I don't think so. The biggest factor that we have right now that we didn't have back in '08 is the high rise inflation. And part of the interesting part that's going to happen that we're going to see in the next couple of months is that inflation is still going to be rising, and there's going to come a point where consumers aren't going to be going out and taking out mortgages because obviously the cost of living has gone up. And because the cost of living has gone up, eventually the GDP is going to go down. And so to combat this, I think big mortgage companies are going to go ahead and lower their interest rates. Right now, we're seeing about anywhere from 4% interest rates to about 6 or 7s. And I think we're going to go back to about 3s. That's going to be a very good news for buyers that want to buy with cheap debt. But it's going to be interesting to see if we're going to see a crazy market like we have seen in the past year and a half, 2 years, where we have multiple offer situations because people are able to get more mortgages, more money, and pay less on the interest. So I don't think we're going to be seeing a bubble. I don't think we're on a bubble. I don't think we're going to be seeing a crash. I think we might be seeing a recession because when the GDP goes down, inflation keeps rising. once GDP goes down for 2 quarters, which is probably going to be this third quarter as well as the fourth quarter, we're going to see that we're in a recession. And I'm not sure how long it's going to last, but I don't think we're going to be in a crash just yet. If you guys have found any value of this, if you guys find this industry interesting, feel free to let me know. Reach out to me. If you guys want me to do something like this in your market, let me know. As well as if you guys want any evaluations, any comps, or anything that you want to know how much equity you have in your home, what might be the next best move for you in order to get the most equity out of your home, or if it's time to sell or buy, feel free to let me know if that's something that you guys want to do. But other than that, that's it for me today, everybody. I hope you guys have a good day. Bye-bye.